All right, we're back. The company today is the riskiest company I have in my personal portfolio. This is the last company I'm reviewing in my own portfolio. I finished, excuse me, I finished them all, but this one is kind of risky. I really didn't buy it for the financial situation, although, yeah, but it's called Cerence, CRNC. It is an AI tech automotive kind of company. Very high risk, high chance of bankruptcy or being bought out, in my opinion, at least. But let's get into it. I'll show you what it's all about. Okay, so this is Cerence. So you can see the performance chart right here. It has been having a rough time. The company used to be over $100 a share. It was a multi-billion-dollar company. Market cap right now is at $127 million. Now, is this company high key possibly going to go bankrupt? Probably. But is there a chance that they will bring it back and possibly become profitable and get back to where they were? Yes. Now, let's just get into it. First of all, with the snapshot, everything looks good. Target price, long-term growth rate is solid. Weighted average is not as high as I would think. That's actually one of the lower ones I've seen. Yeah, let's just get right into it. Income statement. Sales are increasing. Now, this is on the quarterly too. So sales are increasing on the quarterly. That's good. Although, to be fair, they used to be higher. They were declining for a while. Now they're going back up. So I don't really know where to go with that. But I mean, 1, 2, that's little. 3, sort of 4-ish quarters of relative growth. That's not bad. Half credit. Operating income increasing for the past 4 quarters. 5 quarters, not bad. Only thing is, again, if I kind of have to do this one on the quarters. I could do fiscal quarters. That would probably make a little more sense. But you can see sales. Yikes. Yeah, I'm not so sure. Oh, I did 0.3 here. I just realized. So here's the thing with sales. Is it rough? Yes. Is it increasing? Sort of. I'm giving it half credit because that's how I feel. Operating income, not great. Not great. 0 there. In terms of net, again, rough. Now, I believe this is from goodwill impairments. Yes. Goodwill. They had 2 very large goodwill write-offs. I genuinely don't know what goodwill means. I'm just going to say that. I'm not sure what it is, but that is the reason their last 2 quarters were so massively negative. Not really sure what it is, but that is just how it is. 0 on the net income. EPS doesn't look great either. There's another 0. Total shares outstanding. Now, this is one redeeming factor they have, is they have not really diluted their shares at all. I don't know how. They probably should have, but they didn't, which is good. But also, they probably should. Like, don't get me wrong, they did it a little bit. You can see the numbers increasing, but it's not a lot. It's very little. So in that, I'm going to say stable, minimal dilution. They're getting the point. They probably should dilute them, but they didn't. So we're just going to go past that. It wouldn't be good, just to be clear, if they did. But it would probably help their financial situation. Cash looks okay, although when you look at their long-term debt, honestly, even compared to their long-term debt, it's not crazy. They did just take out a lot of debt in the past quarter, which isn't great, but I mean, it makes sense with the way their situation is. Receivables are 7 times higher than the payables. That's always good to see. But cash situation is okay. Assets. So anyway, the goodwill write-offs I was talking about go into their assets. They have lost half of their assets in the past 3 or 4 quarters due to goodwill impairments, which is insane, not great. We'll have to see what happens there. And this is on the quarterly too. So it's not even like this was over a couple of years. This is over the last 4 quarters, year. But short-term debt should be coverable by cash. It is. That's fine. Long-term and short-term should be decreasing. Actually, the long-term went down. Now, one thing with that is it got canceled out by the short term. And I believe what happened was they took out new debt, used that to pay off old debt. And that's kind of what went down there. So no, it is not decreasing. And then retained earnings. I can't even imagine how negative this is going to be. Yeah, big negatives, increasing negatives. So again, I know you're probably thinking, why would you have bought this? This company's probably going bankrupt. Their stock price has gone down from $100. The thing is, they've had their last 2 earnings reports. They talked about sales growth, improvements, cutting costs, things like that. If they can turn this around, it's a AI company. Their technology, from what I understand, is in half of the cars on the road today. High chance of possibly getting bought out by a bigger AI player. I mean, there's a lot of possible positives here that could be coming into effect. Also, they are able to sustain themselves. That's the thing. They can sustain themselves based on these massive negative numbers. You may not think so, but also their operating cash flow is positive. I can't even imagine why. I'm going to be honest, I don't know what other funds is. Other funds is kind of vague. I'm not sure what it is, but their operating cash flow is positive. Now, is it consistently positive? No. But, well, actually, recently it has been. Last 4 quarters it has been, and it's increasing. I'm giving them the credit. I do not care. I make the video. Investing cash flow. Rough. Nothing there. I mean, they had one where it went down, whatever. Financing cash flow, again, I cannot believe that their financing cash flow is actually sort of okay. It is negative other than this year, but last year they took out a lot. It's actually almost always been negative, which is shocking. Excuse me, but I'm honestly going to give them the credit there because it's not bad. This is a small number compared to other ones. I mean, not terrible. Free cash flow, last quarter, their last report, it was really good. 2 quarters before that, not so much. Quarter before that, it was good. But you could see compared to like 2022, where they had 4 straight quarters, they have kind of been bringing it back. I'm not going to give them the full credit for it, I don't think. I mean, this quarter, don't get me wrong, this quarter was good. But was it good enough to say that, oh, they're having positive, consistent free cash flow? No. And now you could also say the exact same thing for their financing cash flow, sort of, but I just like the way it looks more. I mean, they're reducing debt somehow, but yeah. Let's go into the use of cash, see what that looks like. Now, one thing I will say, for some reason there are share repurchases in here. I don't know why they would ever want to repurchase their shares. I mean, they should, don't get me wrong, good thing. But like you can see here, like they issue debt and then repurchase basically the same amount. So I don't really know what to think of that. But anyway, repayment of debt. They've been good for 3 quarters straight, took out a ton of debt. Oh, just to be clear here, this isn't even in thousands. Or this is in thousands. So like this is $200,000. That's $20,000. This isn't in thousands. This isn't millions. This is literally in thousands of dollars. So one thing with them is they're honestly not making that much money, to be completely honest with you, but they possibly can. They just kind of need to figure out how to monetize themselves better. But anyway, repayment of debt looks good for the past 3 quarters. I can't give it the full credit because they took out way more 4 quarters ago and even more. But stock repurchases, again, they're repurchasing and issuing at the same time. As a student, I don't really understand that. Why not just do neither and save everybody the trouble of figuring out what they're doing? But I really can't give them full credit for that either. I mean, they're generally issuing more than they repurchase, especially here where they actually just sold some. But excuse me. So that's going to be a 0 too. Let's go into the margins. This is kind of the important one. So you can see their segments have been taking a hit. Oh, sorry about that. Their segments have kind of been taking a hit, total sales going down. If they can reverse this, it could be excellent. Are these numbers in thousands or millions? So here's the thing. This is in millions. The revenues are in millions of dollars, which is great. But their use of cash statement that we were just on was in not even thousands. So I don't know where all of this revenue money is going, but they need to figure out how to keep it in their company and start improving themselves if they want to do anything. So again, just a massive fixer-upper company. It's skeptical. It is risky. Would not recommend looking into it too much unless you understand the massive amount of risk. So net margin is gross. I mean, that is terrible. Can't give any credit for that. ROA, ROE, terrible. Very, very bad. Long-term debt to total equity. Again, increasing. I mean, has been increasing. Can't give credit for that. So overall, I mean, they have some okay stuff going on in the cash flows. They have a good amount of cash reserve. They can sustain themselves for a little while at least. Yeah, that's Cerence. I'll put it into the thing here. Now, one thing I want to point out is, what was there? So 9.5 out of 22, 40.5. One thing I want to point out here is there is a big, big gap between 49 and 40.5. It might seem like, oh, they're in a similar financial situation to Snapchat. They are not. I may have to... Every company's in different situations with things that I personally value, like operating cash flow. Snapchat did not have good operating cash flow, but Cerence did. Now, is Cerence doing better than Snapchat? No, and you can see that here, but it seems like they're a fairly close score. They are not. The difference between 40 and 49 is large. I would say this rating scale kind of grows logarithmically. kind of grows logarithmically, where like this one. Here we go. This line right here, it grows like this, where it comes up quick and then kind of evens out. That is how my scale, I personally think of it. That's all you need to know. That is my review for Cerence. Hope you got something out of it. Have a good day. See you in the next video. Make sure to subscribe if you want to. Goodbye.